All right, we are live. I thought I'd press the go button, but I hadn't. How is everybody today? Are you as miserable with crypto as I am? Or are you loving life, feeling good? The bottom's in. When Lambo?
Yeah, it's one of those things. How you guys feel? How you guys doing? Like obviously, it's been very interesting price action, right? Which is sort of was expected, but obviously, yeah, that was one of the chances. But I think, yeah, let's go through everything. So do you have anything right now, Ian, to
No, I did take a couple of notes from the update on Friday. So just as a reminder,
mm,
Maurizio does these great updates in the group, and then they usually kind of tie in with uh, what we're going to talk about on the Monday. Uh, well, the downside target analysis, we'll talk about that, and we were both around the same sort of region, that 93. There's the New York session behavior that we want to have a look at. I haven't got too many comments on that. I'll just let you run through that. And correlation with the SPX as
mm,
well. What did we get from there? So that's specifically for the Bitcoin stuff. And then I think for Ethereum, it's just its strength against its BTC pair.
mm.
But no, I don't have. The only thing I got to add is I think that if we drop below 93, then I think, that would be a very bearish indicator because we're looking for indicators all the time. It's not just, oh, we're in a bear market now because of this. It's like indicator, indicator, indicator. And the same with the bull market. We're looking for indicator, indicator, indicator. Um, so the market is confusing. It's grinding.
It's one of those things that when you
Mm.
when the market is not there, you get chopped out, man. Like, you know what I mean? Like, and catching the bottom is tough. You could try, like, you get stopped out several times, and then all of a sudden you catch it. That's part of the game. If you playing the catching the bottom game, or you can just play the trend game and be but with the trend game, we have to wait until the trend shifts in a way,
Mm.
right? So that's kind of the two scenarios that we can actually wait for. But I don't know. Let me just start with sharing my
Mm.
screen, and because obviously on Friday I did talk about the possibility of going all the way down to 93.
Mhm.
Funny enough, I didn't short it. I didn't want to short it, unfortunately, but that was the possibility. And it happened. So, and the reason why I didn't take any longs or anything, right? I knew, like, no, I knew, but this is the indications that we had last Friday. So Friday, let's see, this is daily, yeah. So let's talk about this because I think this price action is being very, very interesting. So on Friday, Friday, that's Thursday. So Friday morning, we were around here, around this area right here. And then we start breaking down this low here. But give me 1 second. Let me just take the dog out.
Mm.
Out, out.
Who let the dogs out? Who? Who?
Sorry. Okay. Okay. Um, Perfect. So essentially, something that I did mention on Friday is that I did not like the, call it manipulation, or the way that the price behaved on sessions. So
Mm.
let me just stop and let me just take it out. Yeah. All right. Sorry about that. So if we have a look at that Bitcoin, right? Let's go back. Let's go back to this area here. So that was on Thursday, yes. And
Mhm.
then Asian session, right, started sort of going up, going up, going up, going up. CVD volume starts sort of picking up. But then on that, I think Wednesday and Thursday, a lot of shorts start piling up. How do you know the shorts? Because obviously market starts dumping open interest start going up, right? And then CBD volume starts people start selling their positions. So that basically a huge sort of breakdown that happened on Thursday. Now you come on Wednesday. Yeah, Wednesday, my time. Now next day happened exactly the same thing, man. Exactly the same thing. All right. So obviously, people now start noticing these patterns, right? So you get beaten twice, right? In a way, like, Asian session all the way up. Now huge open interest is going up. CVD start going low, and this is when the market tank on Thursday. Now, obviously, if you see this price action, you're not going too long on Friday, man. You know what I mean? Like this is clearly something going on New Year's session, trying to get the price up and to just short it. So obviously that price actually, sort of behaved like that over the day. That's why no one actually were buying on the Asian session. So that was my take to say, hold the truck here, man, and just wait to see what happens. But more than likely, we were going to retest that level here on the 93, on the 93 area. So that was the whole thing on Friday, man. So that's why I just say, stay cool, and price needs to sort of, now we are at this level here. Just get this. Where is this one? Let me just. Okay. So that was the level that we're looking for. And where is that level came from? If you have a look at the weekly, right? All right. On the weekly let me just move the camera. From November 2024, that's the level. You know what I mean? That's the level that actually we're holding. Broke down, deviation. So that level is a significant level for the market to pivot to either direction. Okay, so that's what that level is. You can actually argue to go all the way up down here to 89. That's valid, right? Because obviously at some point on January, we had that drop there. Okay, so that's a significant level that we could see that the market could sort of bump, right? Like stop, or new buyers coming in. Yeah, call it whatever. Like if it's at the end of the day, and I keep thinking, I keep saying the same thing. Just think about what people are willing to pay for an asset. They're willing to pay 95, 100, 108, 116, right? And that basically comes down to this. Why are people willing to pay? Are they willing to pay 95? Is that going to be a really good level, right? Or is that going to be lower, right? So let's entertain the fact. So first of all, let me ask who thinks that we could go lower than 92, 600, give it a take?
Start to feel a bit uncomfortable there, so I'm gonna put it as a no.
But this is the thing. Why do you feel uncomfortable? Tell me.
Psychological level. 100,000, 90,000. These are big psychological levels, these tens. And
right.
that previous support that we're looking at historically over to the left there, I mean, that's quite a lot of support, that's on the weekly. So that's what, 2 months worth of support there in that kind of liquidity pool. So I want us to be able to get what we need, get the liquidity that we need from that area there. Maybe move along sideways for a little bit and then push up again. That's what I'd like to see. If we drop below that relief rally, don't reclaim it, then I think that things are not looking so great.
And how far down do you think we can get to? If we, let's go with the horrible scenario. Bitcoin is gonna crash. what is the next level that you think that is going to be a good hold for Bitcoin? Or what do you guys think, right? We have to see the two scenarios here. You know, the best case scenario and the worst case scenario. What's the worst case scenario in your eyes?
Well, I'm seeing that cluster of price action that's the downside deviation from that liquidity level that we were looking at. So I would think that that would be the region.
I agree. So obviously there is a massive region around this area here, you know, from the 73,000. That was the highs, and you know, that could be one area, right? I'm not saying, and by the way, I'm just, you know, we just drawing us like that doesn't mean that the area is going to be right, but we just, you know, that's why it's interesting if you think about it and go back to the recordings and things like that. Whenever we call a level, there is always a bounce on those levels, always. How big of a bounce are they? Who knows? But the fact that it's a bounce is because a lot of people are watching the same level. You know what I mean? Like it could be capitulations, it could be people buying. There's interest around those levels. Why is not an interest at 96,881, for instance, right? Because no one is watching at that level. Everyone is watching those big important levels, right? So this one is another important level that I'm watching, right? Let me just, but I'm gonna do this. This is a weekly level in a way. Yep. All right. But another interesting level that I'm watching, if we go to the monthly, right? Let's have a look at this from the month. By the way, before we go into the monthly, Ian, remember that we were talking about on the weekly, and we mentioned last week that one thing that I did not like about this candle is that it broke a structure. So that's something very, very important for people to understand is the market structure. Whenever we break structure, that's a significant thing. You know what I mean? Whenever we don't break structure, that we could see the pullbacks, but now we start seeing break of structure, right? Now we broke this sort of bullish weekly pattern structure. And then with this candle, the thing that I don't like is that we broke this structure completely, you know? So it's going to need a lot of capital. Like if we come back next week and this next week actually close above this structure, I think we're safe. Other than that, I think we might experience a little bit lower prices. Okay, so this is a very significant price right now where we at. Another important level that I'm watching is the yearly open. So if you have a look at the monthly, right? And those ones, yearly opens, yearly highs, yearly lows, they're always very significant as well. So the yearly open, right, it is at 93. That's another confluence price of that significant level that we had, right? So I'm just going to draw there. So that's the level, the year level that I'm watching. So if we combine those two levels, right, that's why that level there is significant. It's nothing, you know what I mean? It's a very significant level to either bounce from or break to. that's what it is. But we do have this yearly level all the way down to 89. Okay, so bear in mind that we could have scenarios. So last week, now let's bring this down to the daily. So last week we did talk about these scenarios, right? You know, breaking above that, bouncing off that level there. So that was one of the scenarios that I was actually looking for. So obviously this one we can get rid of that one. This one we can get rid of that one, right? Essentially, this is the one that I'm looking for. Is that going to happen today or this week? Or we're going to have a little bit of continuation towards, or we're going to clear these lows right here. Those are the scenarios that I'm looking at now. So breaking this, so clearing this sort of yearly opening away, and then bouncing back up, right? That could be another scenario as well, or number three, or we can bounce straight up from here. Those are my three scenarios, right? So now, which one is gonna be? Who knows, man? Honestly, if we have a look at the open interest and CVD and all that sort of stuff.
Just very quickly before the open interest, Maurizio, obviously we've lost the both the moving averages there. What's the urgency to reclaim them?
What do you mean?
Well, like you mentioned like a couple of different levels there, but having lost the SMA and MA, both 200, I think, isn't that one of the first things that we want to look for as a sign of recovery, that we reclaim that moving average?
Definitely, I agree. But then how do you know, like the first one that I'm looking for, like in order to have is going to be like the 100. So the 98 level is this low here that happened on in June, right?
Yeah.
So in order for us to see like a bounce, like an interesting bounce, I think we need to get back with strength at 98,000, give or take. The interesting thing is that now we sort of need to monitor what type of buyers are at this level. That's basically what I'm looking at, right? That's why I didn't buy anything here. I bought here, by the way, which unfortunately we got to stop. We took some profits around here. What is that?
I'm with you. So you're looking for the type of buyers that are around this bounce, and you'll do that with the open interest.
Exactly, and the CVD, right? That's an indication. That's just obviously, if you want to get more granular, you can actually use tools like, there is tools that actually measure the flow and the orders and all that sort of stuff. Sometimes I use it, but I don't want to show it here. They get complicated. But this is the easiest kind of way to sort of, figure out what type of buyers we have. So where are we at the moment? So are they good buyers at this level? That's kind of what I'm tracking, right? So unfortunately, I don't see buyers, man. There's no buyers. There's no spot the interest at this stage. Can this change in the next couple of hours? Of course it can, right? But until then, there's nothing here. Therefore, this bounce here is more likely being a mechanical thing of liquidations, leverage traders, or going long or short, things like that. But this is nothing that tells me shit. This could be a bounce here. It's not attractive for me to say, fuck, man, a lot of people are going in. Let's go in. You know what I mean? Like that's kind of the type of different. When we went long, unfortunately, I didn't move the stop loss, but I took 50% off on the trade, and then I get stopped out. So essentially, I ended up on break even. Didn't make any money. Don't know if you guys follow that one, but that was on last week. So last week, right? If you have a look, why we went long, right?
On the it was because the CVD was showing a lot of buying interest around the 3,000, for Ethereum. But we're not seeing any buying interest at all on Bitcoin, are we? That's the point here, isn't it?
Exactly. So, but then bear in mind that still Bitcoin is the king. So despite that, even Ethereum is showing better technicals. If Bitcoin decides to keep going down, everything is gonna get dragged down, man. Unfortunately, So this is why we took that trade. For instance, you see, this is a different scenario, right? You see the CVD holding. You see people buying at that level. You see that people are interested to see, 100 could be a really interesting level. And yeah, we went all the way up to 106, took some profit there, but then should have moved the stop loss anyway. But yeah, obviously this is when things shit themselves. You can actually see the amount of CVD coming through as sellers, right? And then that's when the market turned back down. On top of that, you get the open interest rising on market, on price going low. So that's where we're at. So what do I want to see, right, in order to go long and start going long on alts and going like risk on again? What I want to see is, the first thing is obviously, you know, one of there's two things that it could happen here, and I've been mentioning this for a while, and is which one is going to drive the market? Is going to be a spot, or is going to be open interest? Sorry, leverage traders, right? The problem is that we don't know. Sometimes what happens is, we do know that there is a lot of shorts now here, right? So when you start seeing open interest coming down and price going up, right, that means that the shorts are closing their positions. Therefore, price will start going up. If this happens, maybe CVD volume could get interested, right? Like spot buyers say, okay, this is the time to buy, and that will actually fuel that drive upwards. That's option number one. Okay, that's leverage trading driving the things. Option number two, you get CVD and say, fuck man, 94 is the best price that we're going to have in the next year. So I'm going to pile in ETFs and start buying in, so now the price starts, spot buyers start buying in, bam, 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 bam. That's going to be a forced open interest shorts to close, right? Or liquidations. You see that because you're going to see a massive spike on the liquidations to the upside, right? And that's going to be forced. That's a forced situation for shorts. Therefore, that's something that is going to fuel the price hugely. Like you'll see a candle that will do this, you know what I mean? Like, and then price will do something like that. Why? But that's my ideal scenario, because obviously I'd rather have option two than option one. Why? Because when you have a lot of spot buyers at a level, then you know that maybe institutions are coming in heavy. They think the 94 is a good asset value for this asset, and you could see that maybe that's they're willing to hold. Why? Because buyers that buy spot, more than likely they don't mind having a little bit of drawdown. If the market starts going a little bit down, different than leverage traders. Like if I go long here, I put the stop loss here, and things start going low. And if I'm having a good leverage, like a high leverage, I'm just willing to not hold it for a long time. You know what I mean? So that's why I prefer option two than option one. I hope that makes sense. You know what I mean? Like so that's the type of price action that I'm looking for in order to get back into a long. However, I'm gonna be tracking this closely, because there is an interesting area here. The yearly open is always a strong sort of level to hold or to break. And if we hold, I think we could at least go to 100. And then if we do have continuation, then we might take some profits, move the stop loss, and then if it is bottom, this is the bottom. So that's kind of the way that I'm looking at this one. Okay, so yeah, that's basically Bitcoin, man.
So,
in a
so
nutshell.
you're looking to get in long again when we have conditions of constrained market participants in the
Correct.
market, and your preference
Correct.
would be if it was fueled by spot buyers that then force short leverages to exit their position and go long.
Exactly. So
easy then, isn't it? Easy. This game's
man,
easy.
At the end of the day, if you put the emotions aside, technically it is, right? The trick is it's easy once things happen, like I always say this, oh yeah, you know, this happened because of that. When you do it in real time, right? You're gonna see a lot of fluctuations, a lot of things. You don't know if this is gonna break. So the easiest thing for me, that's why, and obviously, if you look at this from the 30 minutes, this is 30 minutes. Every 30 minutes is a new decision to make. If you look at it from that perspective, okay, so it's tiring, man. You know, very tiring. But when you start seeing this sort of structure start breaking, I think that could be an opportunity to go long. Definitely. Okay. Definitely. So that's the one that I'm hunting, right? Is this going to be the level that I might just get another long here from that perspective? So yeah. This is in terms of price action. Okay. And obviously now we're halfway into the month. So this could be the final capitulation before the end of the month ends, right? From that perspective. So yeah. Um, um, I'm thinking on that. So yeah, Darren, yeah, I'm think I'm going to talk about Zcash and all the narrative that is going on with the privacy coins. I've been doing some research on it, so could be some interesting opportunity there. So let's so that's in terms of Bitcoin that I'm watching. Ethereum though, let's have a look at Ethereum.
Ethereum, yeah. It's been pretty sad, Ethereum.
Everything has been pretty sad, man.
Yeah, yeah.
Everything has been pretty fucking sad. But it is what it is, right? Will I short here now? No. If I didn't short around here, I wouldn't short here, right? But okay, let's go with Bitcoin with shorting scenarios, right? Because
Mhm.
there could be an opportunity that we could tag 75. Is that
Yeah.
I think that could be. That's definitely in the cards, man. I'm sort of equal weights on everything by the looks of the price action. Obviously, if we have a look at what New York Open, New York Open has been the king, man. Unfortunately, so price action is being driven by New York sessions, right? So there's nothing that for me will, you know, I need to wait next day to see how they end. You know what I mean? But there is a highly likelihood as well. If we break this 90 area, right, that could be an interesting short all the way down to 75. And if this happen, alts are going to get demolished, right? On that low, right? So, but that doesn't mean that we get to this point. I think this could be the most significant pain point for everybody. Like, I'm seeing a lot of stuff, and it's hard to say where retail is at and where institution is at. But I think if you think from the psychological perspective, I think 100K was the line of the sand for a lot of retail traders. Or if I ask you guys, what was your line of the sand? You know, are you are you already out? Are you say, fuck, this is not good? This is over. This is the top. This is the beginning of the new bottom. Yeah, what do you guys think? I thought 90. Okay, 90 sounds good. Yeah. Jim,
Mhm.
no idea. Anyone else? Out. Steve's out. Rams 87. Okay, 87. Yeah, makes sense around that area, right? Bounce at 90. Okay, so we do have a lot of 90 region sort of deal. Okay, so honestly, I don't know. Like no one knows, and that's why, you know, if I tell you, no, this is going to bounce at 90, you know, I'll be fucking, you know, I'll be a billionaire, man, a billionaire, right?
Oh
If I,
yeah.
you know what I mean? Like, so the only thing that I can say is I'm driving, I'm you know, drawing important levels where I think price could bounce. Then you match it with confluence on, you know, CVE spot that new buyers there are not. If they are, great. If they're not, man, we're going to look for the next level down. As simple as that, right? But then obviously, having a look of today, like if you do intraday trading, which I do, by the way, I think perhaps today we're going to move a little bit lower, at least retest these lows here, right? Like if you look at this from the hourly perspective, right? Probably we're going to range these lows. Maybe why do I think that? Because there's no interest right now from the Asian session. Unless it picks up, I think we could drive a little bit lower. Perhaps, but yeah, it's very hard to trade these levels, man. I wouldn't, I wouldn't, to be honest.
Okay.
But
could we have a look at my favorite metric, the Bitcoin dominance? We could
of course, man.
Have a look at it on the monthly. So this is just rejected, as you can see from that 60 level. So to me, that looks like, I mean, I got these previous levels that are marked out. Okay, so it looks like we've rejected from the previous 2 or 3 levels, and then we've gone for a relief rally, and that relief rally has so far failed. You know, if you look at it on the weekly. So for me, there is a gap between 60% and 57%, of which could open up. It's probably easy to see on the weekly, actually, that small gap. But that 3% to me represents a potential alt window. And I use the term window rather than season. And I still see alts doing something when we lose that 57, and then we've got a long way that we can go down to, 49 or more. And while we're only talking about a few percents, these things do represent fantastical moves when they happen. So how would you think about any of that nonsense that I've just waffled off in light of?
All right. I'll give you my honest answer, right? And
deliver it like you're Scott.
You wash your
wash your brain out.
Wash your brain with soap, man. Because now, here's my thinking about the dominance, right? And Bitcoin dominance, in my view, it is a lagging indicator. It is how do I say this? It is the result of price action of Bitcoin in a way. Okay, so if we take it from that perspective, right? That doesn't mean that Bitcoin. Think about it from the perspective when we actually look Ethereum against Bitcoin. Let me explain it from Ethereum against Bitcoin, and it will make sense on perhaps what I'm saying. The Ethereum against Bitcoin is the relative strength between Ethereum and Bitcoin. Which one is stronger? What that means is, if this chart is going up, that means Ethereum is stronger than Bitcoin. If the chart is going down, Bitcoin is stronger than Ethereum. Okay. However, that doesn't mean, let's say that this is going up like that, but Ethereum and Bitcoin are crashing. This still will go up, but if Ethereum drops at a lesser rate than Bitcoin, this is still going to display strength. Okay. All right. So I hope you see what I'm saying here.
You might have to say it one more time.
Okay. So let's say like you have to be careful with these charts, because this is what displays relative strength. So if let's say this is going up, let's have Ethereum here and let's have Bitcoin here, right? So let's say all markets just start crashing, right? Like this. What that means is Ethereum is crashing at a reset rate, let's say Ethereum crashes and drops 3%, right?
Mm.
And Bitcoin does 10%. I'm just making it up, right?
Mm-mm.
On this scenario, right, this chart will still look bullish. Okay?
Okay.
Because it's the relative strength between the two. So you have to pair this with the market as a whole, right? If everything is going up or everything's going down. Now, what I'm saying though, in terms of your hypothesis of Bitcoin dominance, what you're saying is if this drops, alts are going up, right?
Yeah. Yeah,
Okay,
that's the broad hypothesis, yeah.
exactly. So it is the same thing that if this goes down, right,
Mm-hmm.
alts may be dropping a little bit less than Bitcoin. That's another hypothesis. That's the same thing because dominance is going down, but it depends on market context. Is market going up or market going down?
Mm.
So it is this chart's dominance is just a reflection of the market cap of Bitcoin at that particular time. You know what I mean? It's not a leading indicator, right? It's a lagging indicator. It's just an where we at in terms of the dominance in a way, right? But it is useful, but I wouldn't rely on this to call the alts, bouncing. You know what I mean? Like, how do you know alts are going to bounce, right? Like, let's draw that. And I'm pretty sure that that definitely will happen. If this happen like this, right?
Mm-hmm.
Then Bitcoin needs to go up and alts needs to go up harder. What that means is cash is instead of actually going on Bitcoin, they're going into alts.
Right.
And
So we would, if Bitcoin dominance is going down, we would want to
yes,
look at, say, altcoin market cap and see if that is increasing. And then maybe we'd want to look at the stable coins and see if there's a
exactly.
decrease of the stable coins. So
Uh,
then we've got the full context.
exactly right. So you play the dominance with context. You know what I mean? Like,
Right.
because this is the same thing as these charts, man. Obviously, that doesn't mean that the price needs to go up. It's just that relative strength. Which one is stronger? Which one is crashing the lowest? Which one? You know what I mean? Like, so take that with a grain of salt in terms of all these dominance charts, right? They're useful, but
Mm-hmm.
it's always that if. So that's what I mean. It's not my priority. Like my first priority is always to look for leading indicators. What
Mm-hmm.
are the leading indicators? How do I know if that price is going to go up or going down? So the first one is levels. Like regular levels is something that are leading. What that means is, the level is always there, but the price hits there. You know what I mean? So people are prepared to do something at those levels that could be leading. And if you mix that with CVD in a way, or average, or that's when you know how the reaction of those levels are. But these ones just happen after the price action. So yeah, that's my take. I don't know if I'm right. I don't know if I'm wrong, but this is the full explanation of how I can actually see market cap dominance. You know what I mean? Or
Very
in
interesting.
any, and that means with everything, man. Ethereum dominance, USDT dominance, USDC dominance. You know what I mean?
Mm.
So same thing with any dominance chart. It's just the reflection of the price action of the market cap at a
Mm.
given point after the price
Yeah.
has happened, after whatever move has happened. Okay.
I'm with you. Now, Ethereum dominance, that is
Yep.
just ETH BTC, but reported as a percentage rather than. Is that not right? Like Ethereum dominance, isn't that the same as ETH BTC?
In a way, yes. In a way,
Right.
like if you look at that, like ETH BTC, very similar, exactly the same.
Mm.
And Bitcoin dominance is very similar as the ratio. No, at the there is one. I don't have it here. I'll find it for the next one, right? But there is another chart that you can actually replicate. How do you get the market dominance against cash? Never mind. I'll need to find it. But then that brings me to this one. remember that we were talking about this one last week, which is the
Mhm.
ratio between Bitcoin dominance and the USDC and USDT dominance average,
Mhm.
right? And
That's right.
what we're looking for is to break that level out. You know what I mean? Like, and this chart is very, very similar to Bitcoin itself. Okay, so very, very similar. So those are the type of confluence that I'm looking for. You know what I mean? Like, and this is interesting here because this area, right? You can actually see, like, let's go on a weekly. This area is significant. You can actually see how many times people shifted from cash. This is essentially people shifting from cash to Bitcoin, Bitcoin to cash in a way, right? Like think it from that perspective. So if I look at this from the weekly perspective, right? Where are you here? How is it to? Where is my rectangle? Here. All right, that's a significant level, man. So what that means is if people are willing to shift again, right, as a range, you can actually see this as a range. And
Mhm.
if they're willing to shift again into Bitcoin, definitely that's going to help out. If this starts going to break down, this is what I'm thinking to actually perhaps take shorts, man. You know, like there's no the next level, you know, this could drop pretty quickly. Right. So
Mm.
what this is telling you, right, is that people are not willing to hold Bitcoin anymore. They're just going on cash. Simple as that.
Ah, okay then. And then this is where, if we really wanted to, we could fire up something like Glassnode and we could say, right, who are these people that are not willing to hold Bitcoin? Is it people that have only bought, say, in the last 90 days or 180 days that are not
Yep.
willing to hold
Yep.
it?
Yep. That could be another way to track it in a way.
But
Definitely.
that almost seems too much or a bit superfluous for what it is that we want to achieve. So just so Marlon's asked a great question about ETH's relationship to alts. So right now, BTC is not an attractive risk to reward. Like you've got a 30, maybe 35, 40% move if you were to get back up to kind of all-time highs. So
Mm-hmm.
Ethereum surely has got to look like a more attractive proposition, but we still need Bitcoin to pop to then
I
get that
agree.
get
I,
that
I, I,
money
I
flow.
think so. I think so because I think that this is this is what I think. This is nothing. Uh, this is just a guess. You know what I mean? And it
Mm.
always has played the same way that Bitcoin leads the race, but that doesn't need to happen. You know what I mean? But more than likely, that's what everybody's waiting for. And the reason why is Bitcoin has more weight on the ETF sector, on the financial sector than Ethereum, right? If you look at if you look at what happened with Ethereum and the ETFs, it's not as strong what happened with Bitcoin at at the macro level. So
Mm.
what we want to see, like, and this is just a speculation, what I want to see is Bitcoin start recovering, institutions getting back into the game, because that means that the risk assets are, people are willing to buy risk assets, right?
Mhm.
Therefore, Ethereum is the next one to follow, Solana is the next to follow. You know what I mean? Like, and alts are the
Mm.
next ones to follow, right? Uh, but obviously, when you think about risk reward ratios, it's a tough to say. Like alts are tough to say what a real risk reward ratio, because alts could crash if Bitcoin keeps going down, right? Alts will definitely follow, man. Definitely. So your risk reward ratio is fucked in a way. You know what I mean? That in
Mm.
that perspective. So that's why I'm only like, focusing on Bitcoin and Ethereum pretty much. Another one interesting is Binance. Binance has been holding pretty, like a BNB token is been holding pretty relative to Bitcoin. It's holding pretty well, man. You know what I mean? It's holding pretty well. So I think Binance could be this could be another leading indicator, right? That if Binance starts going up, I think Bitcoin, Ethereum will follow through. But I think Binance is not a bad, it's not a bad one here, man. It is holding pretty well, man. Like if you look at the weekly, right? That was the only chart that's actually started to like it. It went down to sort of like a pullback in a way, and it looks pretty promising, this one. So I'm watching this one closely.
Nice. Okay, well that was awesome, man. Maybe we should have a little squiz around some of the charts or some of the trades.
Yeah, definitely. So, Hype. Let's go through a few charts because obviously, all right.
Met and Uni, I think, were from Friday.
Let's let's talk about this one. So Met, that's holding, right? Holding pretty well on that level, right? This is risky, like I say, but then obviously being a new coin, Meteora is been really pushing this narrative hard. So I think this one, let me just bring it out to daily. So that one is holding. You know what I mean? It's a little bit on the water, but still, over the weekend it tried to actually get up. So what I do think is once we break this level here, this is going to fill this gap at least to 90, right? Which one is it going to happen? Is that our stop loss is going to happen first? That one, that's the question, right? But I do like this one. It's been holding pretty well. Let's talk about Hype, right? Hype is being holding pretty well. I'm not in a position of Hype. Oh yeah, we are in a spot, but I was thinking last week to actually go long, but now it's holding this range right here. So perhaps once we have more strength in Bitcoin, this one could be an interesting play again if you want to do leverage. Arrow, fucking give me the sheds on Arrow, and it looks nice, but it dropped quite a bit, right? This is a level that it needs to hold. Watching this one closely. On any market strength, I think Arrow is going to outperform the market. The fact that it was doing that very much so for the last couple of weeks, but then the only thing is that you retrace the whole fucking move. I don't like this. So watching this one very closely. I think those ones are it. The ones that we had, the last trades. So the one that I want to highlight is all these fucking narratives, the new narrative like SEC. Fortunately, I was going to go on SEC over the weekend, but I sort of like, oh no, man, like, because I already went on SEC on CK. So CK, we're still on CK. It's still looking okay. But what I want to highlight is there is this narrative of privacy. Okay, so SEC is leading the race, of course, right? Freaking SEC, man. So watching this level, but yeah, a lot of people are willing to actually buy at that level. Interesting enough. But yeah, obviously buying at this area is quite tough, very, very overextended. But what I want to highlight is the narrative itself. So before the market crashed on 1 October, we actually went into Stack and into XMR, and look at where all these are at the moment. So XMR is a privacy coin. Let me just put in here. XMR, we have SEC, we have SDRK, we have CK that we are in, and all these ones are pretty much holding, right? Like if you have a look at SEC, obviously it's the leader. You have SDRK, it's just starting to pop, right? And it looks pretty promising. A lot of people are looking for the next SEC opportunity. That's basically what people are watching. Which one is going to be the next privacy narrative that'll give you a really huge up. It looks like STRK is winning. We are in CK as well. CK looks interesting as well. I'm holding that one, but I'm looking at STRK. So I'm watching that narrative very, very closely. And yeah, unfortunately, with before the October, we went long around here, I believe, and then obviously got stopped out, and now we are above that level. So I think STRK, with the stuff that I was all the research that we did, I think STRK could be a really, really good contender for this week, for the next sec. At least I wouldn't hold the long term, but definitely could be a really good up. It has this one does have a really good risk reward ratio from that perspective, because this is the only narrative that is actually holding the market at the moment. So yeah, that's pretty much it. All right, so Travis got it on 0.13. Oh, good trade, man. Fantastic. Yeah. Oh, that's a good one. Yeah, because we went in and unfortunately got stopped out, but then yeah, the narrative is still there. This one is still holding. I'm seeing a lot of stuff on Twitter coming up on this thingy. So I think between these two, probably by the price action, I can see STRK. Obviously, unfortunately, we are in CK. And ZK but yeah, I'm still tracking this one. This one could give us a really good surprise to the upside, hopefully. So we're still on that one. We're still on Trump. Yeah, we're still holding Trump. Yes, we're still holding Trump. Where are you, Trump? So Trump has been interesting. Still, everything is pretty much at the same levels that happened last week. So let's see what happens this week, man. Yeah, that's kind of depends on what Bitcoin decides to do this week. I think everything will follow. So there's no point to do anything really weird unless we see these narratives getting hotter. I think this is the only one that I might get into this before Bitcoin decides to rally. Besides that, that's it, man. That's all I have today, guys. Oh no, I have another one here. I have on my list. I'm watching, obviously, on the back of this privacy stuff, I'm watching Humanity. So Humanity, from the price action, is pretty horrible. But this is kind of the first contender for WorldCoin. This is kind of like a privacy, not privacy, identity with AI, same protocol, and is kind of getting hotter and hotter. Very tough to actually do on leverage, but this could be an interesting spot hold. From that perspective. It could catch, the AI privacy security narrative. So I think this is the one that I'll be watching closely this week. That's all I have, man. Besides that, I have nothing else, man. Unless you guys have any questions.
That was a really, really, really great session. Yeah, next week I wanted to chat a little bit about DYOR. Do your own research, like you've got these narratives down and you're watching them, because things like crypto Twitter are just a mess, and it's like there's so much noise
I know
that's out there. So maybe you could give everybody a little sneak behind the curtain as to how you find out about these narratives and something like that. If that's something
Yeah,
that
sure.
you're interested in.
Yeah, sure. So obviously that's a lot. Yeah, definitely. Yeah, I'll make something. How do I do the research? How do I look into these things? That it's not a proven concept yet, but I do follow a small process, and yeah, and everything starts in Twitter, man. Yeah, crypto is an attention thing, man. So attention, everything happens in Twitter, man. So that's just something
Nice.
that I'll be watching pretty much every single day.
Okay. All right. Great session. Thank you, Maurizio. Thank you, everybody. And see you in the group.
All right, guys. Have a great day.
Cheerio.
Bye-bye.